Hi everyone, welcome back to Beeri's podcast. So this session is going to be about portfolio management, and there is a general saying that don't put all the eggs in one basket. This rule applies for investing, and particularly we tend to bias towards a particular stock or a particular sector and put all the money in that sector only. It's good that if you have that understanding about that sector, you can invest the money. But if anything happens to that sector, the portfolio gets heavily beaten. So, how can anyone plan for the investment and how to better manage their portfolio?
Okay, so this saying comes from the way back. It's a very old saying, proverb,
Mm,
from the days of farming,
mm.
when people had a chicken coop. So when they go to
Okay.
collect the eggs in the morning,
Mm,
when you have lots of eggs to collect from lots of chickens, you put it too many eggs in one basket. If you trip
mm,
or fall, you lose all the eggs because eggs break very easily. So the
mm,
concept was that you spread the load. So in case
mm,
one basket falls, at least you have the remaining baskets. But what would be better is to add further to this quote saying, yes, don't keep all your eggs in one basket. Also, don't keep your eggs in too many baskets because you have to carry
mm.
all those baskets.
Yeah.
So in investing, keep that in mind. It's like what Peter Lynch said. Yes, you want to be spreading your risks. So you invest in more than one company or more than one sector. But at the same time, you need to keep a track of these things. So investing in 100 companies is of no use because you can't keep track of them. Yes, there is a school of philosophy which says you just keep investing, your wealth will grow. You just look at your overall portfolio and just keep investing, making sure you keep growing. But I don't personally advocate that because it's very hard to keep a track of a portfolio which has too many stocks in it.
Mm,
So each person has a different amount of stocks they can focus on. So if you're doing this full time, let's say your job is you're investing and you're planning money on living off this investment and this is what you do from morning till evening, then go for it. Invest as in many stocks as you want because you have all the time in the world to pay attention. But if you're like me and Arun, this is something you only do once in a while and you have another job to focus on and you cannot do this full time, then my advice would be to keep it maximum 5 to 10 stocks. You keep it in your basket of stocks to be that much. Even Anand's Patas list is only that much. And as a company comes out of your list, when another company comes in, your stock should also move. Like a Nifty 50
mm,
stocks come inside the companies you sell and you buy. You should also keep an investment. That is
mm,
why you should look at your portfolio once a year.
mm,
You know, don't keep looking at your portfolio every month. Don't keep looking at every 6 months. Once a year, you take a risk assessment.
mm,
Okay, see how the risk in your life has changed. Can you take more risk, or do you need to take less risk because of your job situation, or you got married, or life situation? So based on that, you change your risk assessment. After you have understood your risk assessment, then you look at all your baskets of eggs and see, okay, does it make sense? Me being in this company, me being in the sector, taken this current environment and geopolitical situation, should I look at rechanging my investment? Because we are long term investors. So then, accordingly, you change and pivot and move your shares and do this.
mm,
So keep that in mind that you don't want to keep all your eggs in one basket, correct? But you
mm,
don't want too many baskets. Try and
mm,
keep yourself limited in your exposure and keep investing and chugging along. Of
mm,
course, if there's no necessity to sell a stock, let's say you bought Tata Motors at 90 rupees, you know, or you bought Indian Hotels at 30 rupees, there's no reason to sell it now,
mm,
unless you need to take the money out for some reason because they're at great evaluations right now. Unless you need the money, I would not advise you to take it out. Those you can put in cold storage and look at other companies.
mm,
So when I say assess your portfolio and move your money investments around, it doesn't mean you just sell everything. You have to take a calculated analysis on this. This is where a good financial planner or advisor would be very useful. SEBI register that too. So they'll be able to look at and tell you, okay, your risk is like this. You have invested in these companies. Some of them you've been holding on for 10 years, 15 years. Okay, if you want to move them, you should move them like this. So it's important to have someone to tell you also what you're doing, especially when you're like me and Arun and you don't know very
yeah.
clearly what is happening in the market and you're not following the market on a daily basis. Then you should have someone who does this on a regular basis to give you some heads up. saying, I know you've been holding on to this company for some time, but they are doing this now, or the management has changed. Do you know that Ratan Tata is not running this company anymore? You know that. So they give you that information, so you know what you're doing.
And one more question is for people who go to job and invest in the company. So what is that important thing that they should notice, because daily they cannot keep track of things which the company is doing, and what is that important thing which we should notice and adjust the investment accordingly?
This goes back to the old thing what Anand's been saying repeatedly. If you do not have the time to do research, you do not have the time to understand market, you're very busy with your work and making sure you don't lose your job, then put in a passive fund and forget about it.
Okay.
Pick a passive fund like the Nifty 50, keep investing monthly. It'll definitely grow because you're investing in the Indian economy. You're not investing in a single company. You don't have to worry about market news. You don't have to worry about anything. As long as India is there and India continues to grow, your money will also continue to grow. I've done multiple videos on this. That if you had put in Nifty 50 in the beginning or the Sensex in the beginning when it started, what the valuation would have become today compared to gold. I've done this. So you can actually see this if you want. Some old videos there. I'm sure Arun will mark it for you. But if you have the time and inclination to read and
Yeah.
invest, then take your time and start slow. Do your research, take your time. There is no rush. The biggest thing everyone starts worrying about is FOMO. They're like, today the market crashed. Should I invest? No, if you've not done anything, just because the next guy has done research and he's investing because the market is crashed doesn't mean you start investing immediately. You do your research, take your time. There'll be lots of market corrections. Like Charlie said, in a lifetime, a human being can see 5, 6 big corrections in your life where the market really corrects big time. So don't worry, you'll have your opportunity to also to make money. The point is to be consistent and to keep doing it over a long period of time and keep it simple. Don't keep it complicated. It should be boring. You're investing. If it's getting very exciting, that means you're not investing anymore. You're gambling.
And the last question is going back to the proverb, when an egg is put in the basket, not all the eggs will hatch to a chicken, and some eggs will fail, and some eggs will only give the chickens. And any investment is like that only. Not all the stocks will go into a multi-bagger, but as a beginner, we think that all stocks should give good returns and turn into a multi-bagger. So how can the investor understand that not all stock will turn into a multi-bagger?
Correct. And if you've done any kind of gardening or done any kind of farming, you'll know this.
Yeah.
If you plant a plant, it doesn't mean it's going to flower. If you plant a mango tree, it doesn't mean all trees will be the same mangoes in the same quantity.
Yeah.
Each one is different by nature and it grows in its own way. This is true with companies too. So that's why I say if you have 10 stocks, it's good. Basket, more than enough, because out of the 10 stocks you invest, 3, 4 become multi-baggers, it's enough. Because that will carry all your portfolio gains forward. So even if you lose money in 2, 3 stocks, become zero, become Anil Ambani's or become Vijay Mallya's, you still would have made money in all the others where this loss would not be so significant. Anand has also done multiple videos like this. Way back in the days when IPOs were worth investing, like the Infosys, Reliance IPOs. You used to invest in all the IPOs because if you invested in the Infosys IPO, what the stock is valued today, plus the dividends and the bonus and splits, if you see, you
Yeah.
become really rich. So those were those days. Nowadays, you can't invest in IPOs like that because angel investors and private equities have pushed you out of the equation, where you cannot enter a company in the beginning anymore. When you're actually applying on an IPO, you're not applying in the beginning anymore of the journey. You are in the middle or you're towards the end, actually, like in the
Okay.
case of Ola and all that. So be very clear when you're in an IPO investment. But if you invest in regular stocks, yes, some of them, like, you buy Tata Motors at the right price 10 years from now. Like I bought Anand when he told me to buy Tata Motors DVR, I bought it for 20 rupees, 25 rupees, 30 rupees. I cannot buy that at that level. When the Mumbai attacks happened, Anand told me to buy Taj Hotel that day. I bought it at 40 rupees, 50 rupees. I bought Indian hotels. You cannot imagine Indian hotels at that price. So you should be remembering that. There have been other places where we lost money. Like Syntex is one place where we lost money. A lot of the Anil Ambani companies we lost money. Not that we bought those companies, because of holding Reliance shares and the way the brothers split the company, we landed up with those shares. We did not sell it, but they became
Okay.
zero value. So these things happen. And being psychologically way we are, we tend to look at our losses more than our profits.
Yeah.
We tell our stories, oh my God, oh my God, oh my God.
Yeah.
Instead of looking up and going, oh my God, oh my God, oh my God, and enjoying life, we look down on the ground and go, oh my God, and think we're suffering when we're not. So it's all right.
Okay. So I hope that this video is informative and you had some understanding about how to assess your portfolio. So if you like this video, please share it with your friends and subscribe to this channel for more videos. See you in another episode with an interesting topic. Thanks for watching the video.
Thank you.